Good evening, friends. This is Rahul Magan here as a Group Chief Executive Officer, Treasury Consulting, and also a venture capitalist. As we speak, Treasury Consulting is a multinational headquartered group based out Singapore. We are a multi-asset and multinational hedge fund. By multi-asset, I mean we actively covering our positions in multiple asset classes. By multinational, I mean we cover our positions at multiple locations. But like I said, and I did repeat it many a times, that we are a proprietary hedge fund. By proprietary, I mean to say no third party. I repeat, no third party can invest capital in our fund. Standing today, 7th November 2022, I'm looking at my software and I can easily see that Nifty 50, which is nothing but a composition of the 50 indexes, is having an implied volatility of around 15%, 15%. To me, this is a very low level of implied volatility. The reason being the war is happening, RBI is hiking the rate, and there are many issues which are right on the table. But irrespective of these issues, the implied vol is approximately 15%, which is definitely a concern to me. Because in FNO, future and options, there is a terminology called fake indicators. The fake indicators means it will give you an indicator to move in a direction X. However, the market is moving in the direction Y. That is something which we really need to understand and we really need to learn. Having said that, 15% implied vol is really a serious concern for me as far as the valuation is concerned, and I can substantiate my point with two other indicators which I have. One is called PCR OI. PCR OI means put to call ratio OI. Put to call ratio OI is 1.33 as we speak. And I don't think I need to explain you what do you mean by open interest. 1.33 means behind every one contract of call, there is 1.33 contracts of put. I repeat, behind every one contract of call, there is 1.33 contracts of put. Now, if put contracts are 33% approximately, 33% higher than the call contracts, then how can the implied volatility is at the low levels? Because mathematically speaking, technically speaking, when the volume in the put contract rise, I repeat, when the volume in the put contract rise, which means the bearish attitude in any market, whether it's the Standard & Poor, Dow Jones, Nasdaq, Hong Kong exchange, Chinese exchange, Singapore exchange, or any exchange, in this eventuality, the implied volatility has to go up. I can further substantiate my point with a terminology called PCR volume, which is called put to call ratio volume, and this is around 1.21. Now 1.21 means behind one contract in terms of volume of call, the put is 1.21, which means the put volume is approximately 20%, roughly you can say, greater than the call volume. Now, that really surprises me. And you know that I am a very technical person, fundamental person, and I never go with the hype. And I did, on a regular basis, just like as we speak, I published a chart of Coverage, who's an IT company, and the chart is very clear that when Coverage was 6128, around 6128, the high. I want people that the mid-size IT companies are extremely, extremely expensive in nature, but I'm sure that people love media, they follow media, they went with this. Today, the same coverage is around 3,700, which practically means near about approximately 35% something valuation is lost. And I'm sure that millions of investors would have bought coverage thanks to our beloved media and the hype. Similarly, if I look at Nifty now and link this with the backdrop which I have, I don't think I need to explain the backdrop which I am having. In this eventuality, to me, it looked like a fake signal. Now, that fake signal could be either side. It could be the put side, it could be the call side also. Because we all know that foreign institutional investors have the complete power and authority as far as the India is concerned to move the market. And I have the statistics with me before putting this fact. Every possible day, I repeat, every possible day, foreign institutional investors are buying approximately 1 million crore plus. You heard me very right, guys. 1 million crore plus worth of index options. What the hell is that? 1 million crore plus worth of index option. I don't think that retail investors in India have the firepower to participate in million crore plus. And few days I did notice it is reaching even closer to 2 million crore plus. 2 million crore plus. I doubt whether retail investor can even participate a fraction of that. It's all a huge money which is flowing into the system. To conclude, a low implied Vols with a high PCR OI and the high PCR volume, it's something that really hits me as we speak. I prefer to keep away as we speak until I get the intrinsic value. I know that many Einstein, Edisons, Newtons would ask a question that can index intrinsic value be computed? Absolutely, sir. Index intrinsic value can also be computed, but we don't use the word intrinsic value, we use a word delta for that. Delta. Remember that stocks are computed at intrinsic value, be it any stock of the globe, while indexes are computed at delta. So if you are able to manage the delta of an index in this eventuality, you would be able to understand most of the things. This is Rahul Magan from Treasury Consulting Group. My personal number +919899242978. I repeat, +919899242978. Have a great time ahead, guys. Thank you.